The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
As we turn into the second part of the week, we're starting to get some additional economic data coming out. Most notably this morning, we received the Producer Price Index data, which we'll talk about a little bit later. Tomorrow, we're going to have the Consumer Price Index data. And then just to recap what already happened several weeks ago, we've got minutes from the last meeting of the Federal Reserve. And so obviously everyone likes to take a look at those and see if there is anything notable that maybe we missed in all of the analysis that we've already done. Chuck, Mark, and Tucker with you. And Mark, the story for the last week or two in particular has been higher yields in the bond market, creating the same dynamic that we saw for much of 2022, which is yields go up, bond prices go down, and stock prices go down. We've got a brief reprieve the last few days here, but I'm curious, when you look at the state of the bond market right now, there's a piece from the Wall Street Journal by Nick Timiraos, who is, in my opinion, pretty much a mouthpiece for the Federal Reserve. He gets out the messages that they either can't or he runs trial balloons for them. And the headline here is higher bond yields likely to extend Fed rate pause. I tend to agree with him, but I'm curious your thoughts on whether the long end of the yield curve moving up is creating conditions where the Fed doesn't have to do as much now.
I'm not sure what the rationale is. I've heard a couple Fed governors say the same thing. And as you point out, if it comes from the Wall Street Journal's lead Fed reporter, used to be John Hilsenrath, used to be Greg Ip, now Nick has filled these shoes. It's credible. We know it reflects Fed thinking. What if long-term rates are going up because economic growth is hot? Does that mean the Fed can afford to pause? What if long-term rates are going up due to supply-demand technical issues? Does that mean the Fed can afford to pause? What if they're going up because of increased inflation expectations? They're not in this case. But in the three examples I just mentioned, no, the natural reaction should be for the Fed to stand pat or continue to, well, a pause would be standing pat, but actually to continue to tighten. So it doesn't follow, for me anyway, using sort of traditional economic thinking, that just because long-term rates are going up, that means the Fed's job is done or somehow makes it easier. The question is, why are long-term rates going up? Is it supply-demand? Is it higher inflation expectations? I don't think it is in this case. Is it something else? Again, better than expected growth unfolding here in the third quarter. So it depends on why, Chuck, rates are going up. The rationale on its face doesn't make sense. And there are other things, by the way, that we'll get into that suggest this is not a self-disinflating economy.
Let me talk a little bit about why I think it may make sense in the context of what I'm seeing, and then you can poke some holes in it if that sounds good to you.
Yeah, let's do it.
Here's my thought on it, is that we do have a situation right now where when you look at inflation expectations, they have come down over the last 12 to 18 months. Is that an accurate statement, Mark?
It is, though they've leveled out. We can elaborate on that. We got some new data yesterday, in fact.
Yeah, they've leveled out, but they're not at the level they were previously. And they're not moving back up at the same pace that yields are moving up, correct?
This is true. I wouldn't expect that, but yeah, that's true.
So here's my view into this is when we talk about the idea of the Federal Reserve tightening, I tend to believe that one of the strongest ways to measure that is through the use of real interest rates. The federal, different, interest rates depending on the time period you're looking at compared to the rate of inflation. And so my view would be that because you are seeing interest rates, intermediate term and long term, moving up, at the same time that those intermediate and long-term inflation expectations are not moving up, and at the same time that even though inflation in the short term is moving back up a little bit because of base effects over the next few months, the argument that I think you can make, or that I think one can make, is that, hey, if it is becoming more expensive to finance projects at the same time that inflation expectations are staying not muted, but more muted than they have been, and at a time where inflation is not running 7, 8, 9% anymore, then the long end of the yield curve is doing some of the work that the Fed would otherwise have to do through additional tightening. And so the Fed doesn't have to do as much because the bond market is doing it for it. Is that a reasonable case?
No, I'm not buying it. It doesn't jive with conventional economic thinking, and I'm not sure. Yeah, I should have known. And I'm not sure I buy it on a gut level either. Look, when rates were collapsing earlier in the year, 10-year yield came down almost a full percentage point, or somewhere in the vicinity of a full percentage point.
Yes.
I don't recall any Fed governors saying, "Oh, we better tighten more. 10-year yields coming in, and that's stimulative." Do you recall anybody saying that when the opposite was happening? I don't recall that ever being said by any central bank official in the world ever, because they don't think like that.
Not directly, but here's what I do remember, and this is something that we talked about as well, is how many times did we hear Powell and other members of the Fed say, guys, you got to believe us. We're going to go higher for longer. The Fed was trying to jawbone that long end up because they needed the market to believe that they were going to keep rates higher for longer, and the market wouldn't believe them. It finally is getting to the point where it seems like it does, and maybe it is, again, because if you look at the growth that's coming in, and here we are now, by the way, where we're getting more and more economic data from Q3. It's no longer just looking at, a couple weeks of data here. We're now, 6 weeks into the data reporting cycle for Q3, and the Atlanta Fed's GDP now is still running north of 5.
So does this feel like a disinflationary economy to you? Couldn't the rise in rates,
No.
the real rate, yeah, right, the real rate, which is going up here. We've got 10-year real rates. They come from TIPS. We've had those for nearly 30 years now. So we know the real rate is going up. It's not based on inflation worries. So that suggests to me that economic activity remains high relative to potential, i.e. the economy's still running hot. And this is confirmed by labor market data and other types of data. Not every gauge we have of economic activity points to an exceptionally strong economy, but most point to a very strong economy. So this doesn't feel like a disinflationary economy to me. Moreover, you've had rates come back in 20 basis points only in the past couple of days.
Yeah.
This is the problem with making policy based on market noise, and this is what bothers me about these remarks on the part of a couple. I don't know if Powell feels this way. He probably does. He's sort of anchorless. But it bothers me. He is, Chuck. He's the guy. He's rudderless. He doesn't think in a disciplined fashion. He has no framework. That bothers me a little bit. But anyway, what bothers me about the remarks over the past couple days is a good chunk of the increase that sparked this thinking on their part has just reversed itself. So we changing policy again in 36 hours? It's a dangerous and erratic way to make policy, in my view.
When we talk about the moves that we are seeing in bond yields right now, these are the kinds of moves that historically have led to someone being carted off the field. A hedge fund blows up because they were on the wrong side of this, or, back in March, Silicon Valley Bank took a bath and went under because of it. I do find it kind of interesting that despite what we've seen for this move in long-term yields, specifically 10-year U.S. Treasury on September 1st was at 4.18%. It got up to, almost 4.9 at one point last week, and we haven't seen anyone get carted off, and I find that kind of interesting that no one notable has blown up from this yet. Does that strike you as interesting as well?
I hadn't thought about that. And, it's the turmoil potentially is not over yet. We all know that volatility begets volatility, so
yes.
There could be more to come. We don't know who may have been exposed to their detriment on what side of what trade. That's an interesting point. It bothers me that the swings have been large, which should have been expected, and with the turmoil in the Middle East, Treasuries being a safe haven, they could come in further as they're coming in further today. We've got another 6 or 10 basis points, hundredths of a percentage point relief in yields today. So should that change the Fed's thinking? I don't see how you can make policy in a consistent way that market participants can depend on by referring to these daily gyrations in asset prices.
Can we just talk about the term Middle East for a second?
You're right, it's narrower.
I'm just having a moment. No, it's an accurate term. How can we never use Near East or Far East anymore, but we do still use Middle East?
I think,
it's got to be the middle of something.
It's not geopolitical. Yeah.
No, it's geopolitically, we don't use those terms. We use Middle East, but we don't use Near East or Far East anymore. I just find that interesting.
I don't know, maybe because the Middle East can still be treated as sort of a monolith in a, I was going to say political sense, but what I mean is the sort of the political status quo there.
Totally.
Whereas the Far East could be anything from Vietnam to China to Japan.
Yeah, and then Near East
to Australia.
And Near East, you're talking kind of the Turkey, Armenia, Azerbaijan area. That's historically what it's been. I digress, though. Let's take a quick break here. When we come back, let's talk a little bit about why the IMF is urging governments to cut deficits.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network.
The federal government has changed the way we deal with required minimum distributions. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and these changes could have a major impact on your finances if you don't calculate your RMDs properly and take the withdrawals at the right time. You may choose to withdraw more than the minimum amount, but you should understand the potential impact if you do. It's also important to factor RMDs into all aspects of your financial strategy so that you have the ability to manage your taxable income now and in the future. Call us today at 800-393-4001 and get a copy of your new free guide called Understanding Changes to RMDs. That number again is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for before the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall is here, and now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands are the top Caribbean destination so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The IMF, that is the International Monetary Fund, not the Impossible Mission Force, they have urged governments to cut deficits in order to dent inflation. That is according to the Financial Times. And it makes me wonder, Mark, do you think that the IMF has been listening to the Financial Exchange recently in talking about, hey, maybe you don't need to be running 6, 7, 8% deficits during a time when you have 3.5% unemployment?
I think it's such a conventional economic view that even Paul Krugman in today's New York Times, I say even Paul Krugman because he tends to favor more spending over less and higher taxes over lower. He's left of center. He's calling for lowering the deficit. He would do it in ways that maybe I don't prefer for what it's worth. He'd rather raise taxes than cut spending. But either the larger point is that he's making and that the IMF is making here is one that is perfectly consistent with conventional economics, which is when the economy is reasonably strong. And I know there are people in situations that belie the average state of the economy, i.e. there are pockets of where people are struggling everywhere. And I don't want to downplay that. But on average, relative to its potential, the economy is growing reasonably strongly. So just sort of take that at face value. Typically, at this stage of the so-called business cycle, government should not be running a deficit. Deficits are stimulative. You save that powder, you keep it dry for recessions when so-called automatic stabilizers like unemployment insurance and food stamps and other things kick in because people will need them. So it's irresponsible on a lot of different levels to run big deficits like we are right now. And we did the same thing, by the way, in the 1980s when the economy was expanding. Huge deficits. There was a ton of hand-wringing. Huge deficits during, say, the last administration, which was Republican, during a time of economic expansion. So this is not necessarily political. Neither party appreciates the idea that you should be running surpluses or at least not huge deficits during inflationary times. During expansion times, excuse me.
Now, there are situations, and just as an example, 2021 was one where the deficit was quite significant, but because nominal GDP growth was even more significant coming out of the COVID-induced recession, you actually saw the U.S. debt to GDP ratio fall during 2021. And so you can have situations like that. But this is something where that initial burst has largely passed. And so what you saw in the most recent quarters for which we have data, in Q1 of 2023, the U.S. debt to GDP ratio was 117%. So, it's steep. And unfortunately, by the end of Q2, it went up by a full 2 percentage points to about 119%. That goes in the exact opposite direction that it was moving since Q3 of 2020, where it stood at 124.5%, and then actually fell over the next, 8, 9, 10 quarters by about 7% because the economic growth was so good. But when we look at it today, you've got nominal GDP moving up by, what are we at now, Mark? Like 6 and change, somewhere in that ballpark?
Yeah, it would have to be. Yep.
And yet you're still running, deficits that are north of 7%, so it's no surprise that the deficit as a percentage of GDP goes up.
Yeah,
so,
right.
I'm sorry, go ahead.
No, I was going to say, the reason we pay attention to that is because, and we're not at this point yet, but at some point deficits become unsustainably large. They grow as deficits and debt grow uncontrollably as a percentage of GDP. That crowds out investments because government issuing debt competes with the private sector issuing debt. That pushes up interest rates. In fact, the realization that deficits, although why the realization occurred over the past couple months and not a year ago, I don't know. But the realization that deficits and debt will be unsustainably high for the foreseeable, indeed indefinite future may have dawned on market participants and could be pushing up real interest rates, which is what we talked about in the last segment.
Well, because it also becomes something where when you talk about the percentage of a budget that interest expense chews up, hey, as interest rates go up, it chews up a bigger portion there, and so the deficit widens just because you have to pay more interest as well. And so you get into this cycle that it builds just because it's there, and it's something that you want to avoid, obviously, because there are two ways. Well, there are three ways out of that. The first is that you rein in that annual deficit to something that's much more reasonable. The second is, okay, if you can't do that, hey, then you've got to have larger annual deficits, which means interest rates probably have to go up higher, which hurts growth otherwise.
This is the death spiral.
And the third option is, hey, the Fed can just QE its way out of that and you cut interest rates, but then you potentially have a rebound in inflation. So that there are no easy decisions when you get to that point. And I agree with you, Mark, we're not there yet. But maybe we're starting to see signs that that could be on the horizon. Over what time period, I don't know. Maybe it's 2 years from now, maybe it's 10. But it strikes me as more than a year from now, but less than 20. If we continue on the same path, that starts to matter. Now, that's not, an investable thesis. I don't know what you do with that knowledge other than to say it's there and it's something that you have to be cognizant of in a way that you didn't have to worry about it for much of the last 50, 60 years.
I think it's reasonable to think that interest rates across the curve from very short to longer term will be higher for longer. I don't mean higher for longer in a Fed, the way that the Fed policymakers are currently using that phrase. I mean higher for longer because of this massive issuance, which is going to put upward pressure, all else equal, unless some source of demand comes in to save the day, like emerging countries did in the 2000s, keeping interest rates on government bonds all over the globe very low.
Quick break here. When we come back, it's Wall Street Watch and Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, if you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are extending their gains so far today as Wall Street reacts to a hotter than expected producer price index this morning. Investors also await tomorrow morning's key inflation reading via the Consumer Price Index and third quarter bank earnings on Friday morning. At the moment, the Dow up by 0.25%. S&P 500 is edging 5 points higher. And the NASDAQ up over 0.33% or 49 points. Russell 2000 mostly flat, edging into positive territory. 10-year Treasury yield, that is off by another 6 basis points, now at 4.58%. And crude oil retreating again, down nearly 2%, trading at $84.32 a barrel. As reported last week, ExxonMobil has now officially struck a near $60 billion agreement to purchase Pioneer Natural Resources, marking the largest oil and gas deal in 2 decades. The deal values Pioneer at almost a 7% premium to its Tuesday's close and ultimately boosts Exxon's status as a dominant player in the American fracking industry. Shares in Exxon are down by 4.5%, while Pioneer stock is up by 0.75%. Meanwhile, shares in Plug Power are up by nearly 5%, after a regulatory filing revealed the battery company projects a sharp increase in revenue by 2027 to about $6 billion. Elsewhere, Bank of America downgraded bearings and power transmissions product manufacturer Timken to underperform from neutral, citing inventory concerns moving forward. That stock down by 0.5%. And shares in video game maker Take-Two Interactive up by 1%. After Raymond James upgraded the stock to outperform, noting it's a reasonable valuation based on optimism about the company's near and medium-term future, as well as a more consistent path to video game releases. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're joined now by Mr. Todd Lutsky from the law firm of Cushing & Dolan. The reason why we call the segment Ask Todd is because it is your opportunity to ask Mr. Lutsky questions about your estate plan. It's that simple. The studio line here is 888-205-2263. That number again is 888-205-2263. So if you've got an existing estate plan and want to ask Todd a question about it, that's the number to call to talk to him right now. If you don't have an estate plan, but just have an estate planning question that you want to ask Todd about, that's the question you call as well. And, well, no, really those are the 2 reasons why you would call, not just to chat with us. It's not what we do. But again, that number is 888-205-2263. So if you've got an estate planning related question, get calling so you can get in line to speak to Todd. Mr. Lutsky, how are you?
I am never better, and you?
Doing well. I was reminiscing yesterday about my childhood, actually, and how my dad used to put me in tires and roll me down a hill.
Oh, yeah. You're not allowed to do that today.
Those were good years.
Yes, they were.
Todd, let's talk a little bit about IRA beneficiaries. Historically, not even historically, the last 15, 20 years, when someone comes in and says, hey, how do I title my beneficiaries on an IRA in order to make it mesh with my estate plan? What kind of guidance would you give them prior to the last year or so?
I'm going to take you back even further than that. Prior,
oh, good.
We can go back as far as you want, and even still today, oftentimes, more generally than not, you still might tell them that the best primary beneficiary of an IRA is your spouse, right? That's still a good option, right? It's not, now it's no longer the only option. I think that's what you're driving at, when you talk about this, Chuck. But there's some other options. That's still a very good option for a lot of people, and especially if you're doing a revocable trust plan for your estate plan, that's still going to be the option. Surviving spouse number 1, then your contingent beneficiary, again, survive if you have a revocable trust estate plan, still going to be the case, will either be your kids if you have them, or the revocable trust when you pass, the contingent beneficiary, not the primary. And the reason I say or in that case is because if your revocable trust plan is dealing with protecting the assets when you die that are in there from creditors of the children, future divorces or just bad money situation, bad decision making, drugs, who knows, then having the IRA pay to the trust instead of paying directly to the child can also serve to protect that IRA from those kinds of problems and creditors of the child. So I think that's the option of putting it, in the trust. So that arrangement still exists. The difference comes when you have an irrevocable trust and a testamentary trust and you want to protect assets from the nursing home. We'll learn this whole month how an irrevocable trust might offer you some different options.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question that you want to ask Todd related to estate planning, this is your chance to do it right now on the air. The studio line is 888-205-2263, and we call the segment Ask Todd because it's your chance to ask Todd your questions. One more time, that number is 888-205-2263. If you have an estate planning related question that you'd like to ask Mr. Lutsky, that is the number to call. We're going to take a quick break here, but when we come back, it's right to your calls with Todd Lutsky, so make sure you get in line, 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead, get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of consumer cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your acquired minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. Again, if you have a question for Todd about your estate plan or lack thereof, the studio line to talk to him right now is 888-205-2263. That's 888-205-2263. Let's go first to Chuck in the Metro West. Chuck, you are on with Mr. Lutsky. What's your question for him?
Well, good morning. Great show. Thank you for taking the call. I appreciate it. Quick question for Mr. Lutsky about car ownership. My father, as he's spending down towards the Mass Health guideline of $2,000, I've been told that he's allowed to own a car, and not a Lamborghini per se, but a vehicle. And what happens with that ownership, and then what would happen with that ownership upon death?
So it is interesting when you're applying for Mass Health, they do have financial limits, and I believe that's what Chuck's talking about here. So in this case, it's a single person, assuming he is single at this point, whether it's divorced, widowed, or what have you. If there's no spouse, then he's allowed to have a maximum of $2,000 of assets from a financial standpoint. However, one thing they don't count is a car. Now, you're allowed one car, and they do technically say one car regardless of value. Okay, now don't get hung up on that. He's right. I wouldn't run out and buy, like a Lamborghini. But, you're allowed to have one nice car as long as the car is used for that person's, benefit. You got to run somewhere for the client, for your parent. You got to go pick something up. You got to drive them to a place. They're allowed to have one car. So that will not be countable in determining his Medicaid eligibility. So good news. And then just to make it simpler, if you're going to get that car, maybe put two names on the title. Like if again, there's no spouse and maybe you're the child who's supposed to get the car, put both names on the title to the car. That way, when one dies, it's an easy trip to the Registry of Motor Vehicles to transfer the title to the surviving joint owner, and it would avoid probate and everything else. So I think that's probably the easy answer for you on that front, and I just hope that if there are other assets, Chuck, that your family has, I always just throw this out to everybody. I would not recommend applying for Medicaid on your own because all the last-minute techniques, the nursing home's not going to help you find. That's what the elder law attorney would do. So that's just my little 2 cents for you on that front. But, folks, another 2-cent item for you, which is probably worth more than 2 cents, is IRAs and how to deal with them. This is the guide we're giving away this month. It's a new guide. Why name your estate an IRA beneficiary? Well, everybody's got an IRA, or most people have an IRA as part of their estate plan. And, darn it, it is the hardest asset to plan for. How do we protect it from the nursing home? How can we reduce estate taxes with it? Can't put it in a trust while we're living. Maybe it makes sense to put it in the trust when we die. Is there, how do we use a testamentary trust if we're trying to protect it from a nursing home? Is there a way to do that? This guide now, with the Secure Act, many people don't like it. The Secure Act isn't the greatest thing. It kind of causes money to come out quicker to beneficiaries than it used to. But it did offer us a planning opportunity. So learn how to use an IRA to reduce estate taxes, protect it immediately from the nursing home without a 5-year waiting period, have no adverse income tax consequence, and make it available to your spouse as well, so there's accessibility. Get the guide, 866-848-5699 or legalexchangeshow.com. You can download it there. Again, how does an IRA fit into your estate plan? 866-848-5699 or legalexchangeshow.com. And you know, there was a caller that I think got disconnected. When you're on your cell phone, that happens. So if you're still listening, we did get the question. I do want to answer it for you because I think it's one that resonates, quite frankly, with a lot of people. So in this case, the person is a resident of Mass, but has property in Florida. Not uncommon. And there's a mortgage on the property in Florida. And I think the question related to what happens to the mortgage when you die. Well, I certainly want to address that. I also see a lot of other questions that this person might not have been thinking, but we need to address. So, you know, first and foremost, when you have property out of state, be mindful. One good thing about it is if you're a Mass resident and you own property out of state, that property cannot be taxed in Massachusetts for estate tax purposes. And that's helpful because that's probably increasing the value of this person's estate or your estate if you're listening. So back it out for Mass purposes, and why that's so important is not only has property values gone up all over the place, but definitely in Mass, definitely in Florida. But more importantly, if it's not included, it can reduce the value of your Massachusetts estate tax or your Massachusetts estate value. And with the new estate tax law that we now know has passed and is going to be retroactive back to January 1, 2023 deaths, it has increased the exemption from $1 million to $2 million. So if you were teetering on that $2 million exemption and you say, oh, wait a minute, I got a $300,000 property in Florida, back it on out. If you back it out, now that pulls you under that $2 million number, and likely you won't even need to file a Massachusetts estate tax return. Wipe your brow. More and more people can now stay in Massachusetts. They don't have to move. So very good news on that front. Back to your question, though, what else is the issue? Well, I worry about the mortgage. Yeah, I'm going to get to it. But what about probate, right? If I own property in another state and I haven't done any estate planning, then I can have a probate problem not only in Mass, but then I'm going to have to file an ancillary probate in Florida. If you thought probate was bad, try probating in multiple states. Talk about doubling your pleasure, right? That is something you don't want to deal with if you don't have to. So do an estate plan overall, even though it's not taxable in Mass, don't get confused. You still need to transfer that property, the Florida property and the Mass property, and put it into your trust that you're doing, whether it be a revocable or an irrevocable trust. You still need to plan for it, even though it's not taxed in Mass. Lastly, the mortgage. Well, yeah, mortgages exist, and you have to understand when you have a mortgage and you transfer that property into a revocable trust, I'll come to the irrevocable trust in a minute, but when you transfer it to a revocable trust, you really don't have to notify the bank because you're still really considered the owner. It's a revocable trust. It's really yours, and it's not going to trigger the due on sale clause. However, when you die, which I know was part of the question, yeah, when you die, the bank is going to want to call that note. It's going to trigger that due on sale clause saying, hey, the person I loaned this money to no longer is living, therefore I want to get paid in full. And you have to go to the bank and either renegotiate the note, which of course you know today they're going to want to do because rates are so high, so they're going to want to get a new higher rate, right? Or you're going to have to pay off the note one way or another. So be mindful of that. One last comment, when you transfer that that property in Florida or any encumbered property to an irrevocable trust, we generally would reserve a life estate to prevent the due on sale clause from being triggered. If you keep that life estate or this right to live there, then they're not going to trigger the due on sale clause. So there you go, folks. That's it for today. But call and get the guide, 866-848-5699 or legalexchangeshow.com, and learn how to use your IRA in your estate plan.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
The views expressed in this segment are solely those of Cushing and Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing and Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home. And by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing and Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. That number again is 866-848-5699. Or you can request the guide online by visiting our website at legalexchangeshow.com. That's legalexchangeshow.com.
Still a lot to come in hour 2 of the Financial Exchange. We're going to be talking a little bit about corporate profit expectations as we kick off third quarter earnings in earnest over the next couple days. Also, the U.S. government trying to crack down on junk fees. We'll talk about which fees are junk and which are not junk. And then in a discussion of something that's probably very familiar to many baby boomers listening right now, why does downsizing to a smaller house just not make as much financial sense as it used to? I'm sure this isn't something that's unique to just a couple people. We've been hearing a lot about this. Quick break, hour 2 of the Financial Exchange, coming up soon.
Hi, folks. It's Susan and Mike from the Armstrong Advisory Group, and we have a brand new guide out this month, Understanding Changes to RMD Rules. Mike, the rules for RMDs are different when it comes to inherited IRAs. How are they different from your own RMD?
Yeah, so your own required minimum distribution generally starts in your 70s with a few very limited exceptions on your traditional retirement accounts. When you get into inherited, you have a lot of different paths with a lot of different rules. So I guess starting off first with the most basic is if you leave your IRA or your 401k to a spouse, it's pretty simple. They treat it as their own retirement account, or they have the option to, and the RMDs are based on their own age. Where the complexities start getting into is when you leave them to a non-spouse. Here, there is an entirely new set of rules that was just changed in the last few years. It applies both to traditional and Roth retirement accounts, and the rules are actually so new that the IRS has not yet issued permanent guidance on how this is all going to work. But the general theory here is that you're going to need to empty out that retirement account within 10 years with a few limited exceptions. Where the IRS is still issuing some new guidance is around how much you'll need to take out every year during that 10-year window. And so we'll see where that goes over the next few years.
There are certainly more complexities when it comes to an inherited IRA. You can get the details by requesting our guide, Understanding Changes to RMD Rules. You can do that at 800-393-4001 or request a copy online at armstrongadvisory.com, 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register, nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single line 5 GB data plan with unlimited talk and text compared to lowest cost single line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The federal government has changed the way we deal with required minimum distributions. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and these changes could have a major impact on your finances if you don't calculate your RMDs properly and take the withdrawals at the right time. You may choose to withdraw more than the minimum amount, but you should understand the potential impact if you do. It's also important to factor RMDs into all aspects of your financial strategy so that you have the ability to manage your taxable income now and in the future. Call us today at 800-393-4001 and get a copy of your new free guide called Understanding Changes to RMDs. That number again is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck and Mark with you as we start the 11 o'clock hour here on the Financial Exchange. And markets are up modestly today with the Dow Jones up 71 points. The S&P's up 12 and the NASDAQ up 89, so about 0.25% to 0.5% gain in markets taking place today across your broad U.S. indices. 10-year U.S. Treasury is seeing yields come down by about 6 basis points to 4.59%. We've got oil on the move as well. And good news, it's on the move coming down off $2.19 a barrel to $83.78. By the way, if you take a look at the AAA national gas price average, you may have noticed filling up at the pump, the prices have dropped in the last month, going from a national average of $3.83 down to $3.66, and likely still a little bit more room to move down probably into the $3.50 range based on where gasoline futures have moved over the last month as well. We've got gold up $8.80 to $18.84 an ounce, and I guess the only crypto news that's happening right now is the Sam Bankman-Fried trial, which is it's just wild. He got a haircut. Did you guys hear that?
Oh, yeah, I did hear this, yeah.
Have either of you seen it?
No, I've been looking for it. I don't know why. I just want to see what he looks like clean cut, I guess. I don't know.
They said that he got a haircut. I've seen all these articles about it, but I'm trying to see, like, all you have are the
sketches,
courtroom
right?
sketches.
Yeah.
And like we all saw what the courtroom sketch artist did to Tom Brady. So
true,
like,
yeah.
I just don't know that what we're getting in these sketches. Why do they do those?
Because TV's not allowed, or camera's not allowed. I mean,
why do they do them in that style? You mean they all have the same odd style? Is that what you mean?
Right, like, yeah, why can't you have, like, your own unique twist on it? Like, no, I would love, like, a short
comic book style.
I would love an SNL skit on, like, hey, Picasso's first job was as a courtroom sketch artist. You know, something like that would be great, I think.
Yeah.
But
just give it to, like, a 4-year-old to do the courtroom sketch.
This is his head. Yeah, I think stuff like that would be absolutely great. But, alas, that's not the world that we live in. Instead, we get hand a bunch of colored pencils to someone. And what is the path to that being your job?
I don't know. Yeah, like how do you end up having a courtroom sketch artist?
Is that what you do to pay the bills when you're an artist?
I assume that's not full time. I assume that's just like a freelance thing.
I don't know. I don't know if they're like court employees or if you're just a 1099 employee who goes around and is like, hey, any trials today? I'll draw for you. Like,
there's a balloon animal while you're at it.
I split my time between doing courtroom sketches and doing caricatures at weddings.
Yes.
You know,
8th grade birthday parties. Yeah.
It's a fascinating. It's kind of like being a blimp pilot. You know.
Yeah.
Okay, well, you failed flight school, so here's something soft and bouncy that you can fly instead.
Just
like
float around the stadium for about 4 hours.
Yeah, it's let's move on.
Yeah.
Corporate profits. Here's the thing. You have all these estimates now that are showing that there's going to be monster corporate profit growth over the course of 2024. The estimates that I've seen from FactSet are in the ballpark of 12%. Refinitiv is in the ballpark of 12%. So there's a lot of thinking that corporate profits are going to move up significantly next year. The piece that I struggle with, Mark, and I was talking with Mike about this earlier this week, is if you look at corporate revenues, they're only expected to go up by 5 to 6%. So for the last 18 months, we've been seeing a period of margin compression because of higher labor costs, higher interest costs, higher costs. My question is this: what is suddenly going to change in 2024 that shifts that, and now we move back into a period of margin expansion from the meaningful contraction in margins that we've seen for the last 6 quarters?
Specifically, I obviously don't know, but generally it's going to be lower costs, so they can exert greater cost control, which would be a bad thing possibly for real wages. I mean, I don't know how else you square that.
And I guess I look for what's the impetus for that. You know, how do we get there? Because all I'm seeing right now is that we still have, a UAW strike that's going on. There's a Kaiser Permanente strike of healthcare workers out in California. You've got labor still kind of, labor's still in heat check mode, to reference, basketball. Labor is still throwing up half-court shots saying, I think I got this. What is going to change that dynamic? The only thing that I come to that changes it is you have to see a meaningful rise in unemployment that makes labor say, hey, I'm kind of content with what I've got. But a meaningful rise in unemployment does not typically correlate with a 12% gain in profits.
Yeah, these things do seem to be in tension. They don't seem to be consistent in an economic sense. The assumptions and the circumstances required to get us to this point, profit-wise. Growth-wise.
Something's got to give. This feels an awful lot like earlier this year where we were saying, hey, it looks like we've got, strong profit projections later this year, but the bond market is saying recession because, rate cuts are priced in July. We said something's got to give, and it probably was the bond market. And lo and behold, look, it was the bond market. So in this case, I'm trying to figure out what has to give. Is it going to be, hey, there's going to be a recession and these profit, expectations are these profit growth expectations are too significant? Or the other piece, quite honestly, because this still kind of looks like an immaculate disinflation being priced in by profit margins. The other piece that I get to is, okay, you could have corporate profits go up by double digits, but revenues have to go up by close to that much also, and that means that inflation's probably back.
And these forecasts, too, could be bottom-up. I don't know if the piece...
I think they are. I
so
believe they are.
There's no reason to expect them to be consistent with analysts to be consistent with one another or consistent with, say, what a top-down, and by that we just mean starting with the economy and what you think that's going to do, you can deduce what earnings will be and then perhaps what earnings among individual sectors will be. That's a top-down approach. Start with the big picture. Bottom-up approach is different, so the two don't necessarily have to be consistent, and indeed it's hard to marry the bullish bottom-up with reasonable top-down views in this case.
Yeah, I would say that's fair. Let's take a quick break here. When we come back, we've got trivia, and then we're also talking about junk fees. Which fees are junk? Well, you have to come back with us in order to find out.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, if you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Let's do a little bit of trivia here on the Financial Exchange. It's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night. Because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. On this date in 1975, Saturday Night Live debuted on NBC. The original cast of SNL consisted of Dan Aykroyd, John Belushi, Chevy Chase, Jane Curtin, Garrett Morris, Lorraine Newman, Michael O'Donoghue, Gilda Radner, and George Coe. Trivia question today: who was the host on the first episode of Saturday Night Live? Once again, who was the host on the very first episode of SNL? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, how do you feel about fees?
Generally, Chuck, I don't like paying for anything.
Meaning, why is everything not just free?
Yeah, man.
You know,
in some big cities, it is. You just have to find the right crowd.
If I just
what's
want
the
that
deal
house,
with the prices, man?
I just want that house, man. Can I just have it?
You can just have it. Just take it. So the FTC and the CFPB announced this morning that they are proposing rules that would do a couple things. Specifically, the FTC is proposing a rule that would prevent bait-and-switch pricing on things like hotels, airfares, concert tickets, the stuff where it's, hey, you can get this, ticket or this room or whatever for X dollars, and then you go to check out and it's like, oh, but here's your 20% convenience fee, and here's a $40 resort fee, and yada yada. Basically making companies show the price up front. I don't really have a problem with that. If you want to say, hey, you require upfront pricing so people don't get surprised, fine.
Hey, Chuck, what about auto dealer documentation fees?
Don't get me started because I just signed a lease and I don't want to feel worse than I can't do that right now. I mentally I can't go through that paperwork and be like, where did I screw up?
You're suffering from car purchase PTSD.
No, I'm cool with it because I go in at this point and I basically say, look, I know that I'm not going to get the best deal. I'm just going to accept that as the nature of, what I'm doing.
Take your medicine
and move on with my life.
Good man. You're a bigger man than I am.
Because otherwise, I don't know how I would sleep at night. The other place, okay, and this is where we get into some other stuff that I do think is, a little bit bothersome, is that, just as an example, some of these fees that the CFPB and FTC are looking to crack down on are things like late fees on credit cards and airline baggage and change fees. Well, those things are often, declared up front, like, hey, if you want to change your flight, you're going to have to pay this cost. You know these things going in, and ultimately it's the business model that Americans have chosen when it comes to airfares because for anyone who's not changing a flight, the presence of those change fees, as unappetizing as they are, those change fees help keep the other prices lower because you're not paying them. It's only the people who are changing are. So I'm fully in favor of transparency in pricing, but as far as, hey, do we want to actually impact the pricing of any of these items, that's a little too central planning control-y for me to say that that's a good idea.
Yeah, what practices aren't already illegal it is illegal to hide fees as I understand it.
Well, yeah, but look, Ticketmaster's been doing illegal things forever, and somehow they still are not in violation. They are in violation of their consent decree with Live Nation for that merger to go through. But for some reason, regulators just keep letting it go. I don't get it.
Yeah, if this just comes down to enforcing existing law, forget about how we feel about it, but it seems to make sense to me, then I guess I don't have an issue with it. But if this represents the issuance of new regulations, I'm not sure how I feel about it. I guess generally a proponent of buyer beware.
very much. I do think there is one thing. There is one piece that I did find, rather amusing in here, just in terms of, again, it's always fashionable to rip on the banks. The CFPB also said it was refunding $140 million to U.S. customers, which included refunds from some financial institutions that charged customers monthly fees for paper bank statements without ever printing or sending the statements. That seems reasonable to me. If you're getting charged for a paper statement and you never received one, it would seem to me that you should have that charge reversed.
Yeah, that's something I would expect people to. I'm not condoning the practice, obviously. This is why you have to keep an eye on your statement. What are they charging me for, and am I getting the service? But it's not realistic to expect people to do that on average, so the government's got to step in. I don't know. FTC seems to have its. I know there are other agencies involved here, but it would seem like they have enough to do. It's hard to say I'm opposed to this because the practices are so egregious and annoying. But at the same time,
it's not small. The biggest problem. That's the thing. It's
maybe that's what I mean.
I look at it. Yeah, it's governments exist to solve the problems that are pretty much impossible to solve at an individual level. Like, there's a reason why we have a U.S. Army instead of you and I just, going out and patrolling, Mark. Like, we wouldn't be very good at it, if we're being honest. But when it comes to, hey, I had a 40-cent paper statement fee and I didn't get a paper statement, yes, it's wrong, but is that where we want to be focusing all of our effort?
Right.
I'm with you on that. I find it amusing just that you're getting, how do you get charged a paper statement fee if you don't receive one?
I'm sure it's happened to all of us. We just missed it. It's a record.
Probably.
I view it as a record, probably a good faith or not a bad faith. I wouldn't ascribe it to any sinister motive. They're trying to pad their coffers by charging us more for paper statements that they didn't actually send out. But it just seems to me something that would occur in the ordinary course of business and comes out in the wash in the long run. I don't know. Keep an eye on your statements.
Yeah. Let's talk a little bit about the process of downsizing for homeowners. It's obviously something that is most prevalent amongst those who get close to retirement. The kids are out of the house. You say, gee, I don't need this 3 or 4 bedroom home anymore. Maybe we can downsize to something that is, closer to 800 or 1,000 square feet instead of 1,500 to 2,000. But given the dearth of new construction in that size, and given where interest rates have gone to, a lot of people who want to downsize are finding, hey, it's going to cost me as much or more to move to a smaller home. Why would I do that and go through all that hassle if I can just stay here for the same cost? And so you see further jamming of the housing market as far as the amount of inventory hitting the streets.
What is the argument for downsizing if it doesn't save you any money?
Yeah, it's why would I move somewhere smaller if it costs me the same amount and I have to go through the process of moving, which sucks.
Yeah, plus incurring.
I don't know, just do it.
You want that house, Tucker, huh?
Yeah. No, not anymore. I mean, back in the day, yeah.
I was going to say, I thought you did.
Did the old addition there, so we're good. But 3-4 years ago, yeah. Why don't you go ahead and downsize for my benefit, selfishly.
I hear you. But the real problem is that aside from 55-plus communities, no one builds homes that are 800 to 1,500 square feet anymore.
I mean, turn your big house into a 2-family if you feel that strongly about it.
The zoning laws won't let people.
Oh, good point. Yeah, we're up against zoning laws in that case. Well, then then just don't tell anybody. I don't know what to tell you.
I don't know that that's the right answer because
I'm not a lawyer, Chuck.
No.
I'm not advising anybody break the law. I'm just advising people to use discretion generally.
Tucker, what are the little houses that people are building in the back that need a permit for? The ADUs, the auxiliary dwelling units?
I always forget. Yeah, that's what it is. That's exactly what it is, yeah.
Yeah, where you need a whole permit just to do something like that, yeah. It's wild, but I wonder if anyone's ever built an ADU, moved into it, and then sold the main property to someone unrelated to them.
Can you do
I wonder
that?
if you could do that. I don't know. Like, could you get, like, a life estate in the ADU? Don't know. Let's take a quick break here. When we come back, we've got the trivia answer, and then we're talking about NIMBYs right after this.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutsky, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
Great question, Tucker. Qualified retirement plan assets are difficult to deal with in the estate planning world. They're that round peg that you try to put in the square hole. It just doesn't fit well. Why? They have both income tax components associated with them and estate tax components, right? They are includable in your estate. However, if you wanted to put your IRA into a trust, into this irrevocable trust, you cannot do that. And not only into an irrevocable, you can't put it into a revocable. Why? In order to do that, you would have to take the IRA and liquidate it, pull all the money out and put it into your name, subject it to income tax, and then put possibly 40% less into the irrevocable trust. So that's why it's difficult to protect IRAs in advance from the nursing home. However, you could name the designated beneficiary of the IRA, the irrevocable trust, as part of your overall estate planning process. So that can be helpful, but it is a tough part of the estate planning world.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699 or request a copy at legalexchangeshow.com. Once again, 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Trivia question today was, where the hell is it? Here it is. Who is the first host of SNL? I don't know why I couldn't remember that. It was not Steve Martin. It was, in fact, George Carlin. Carlin served as the first host of SNL, but he didn't appear in any of the sketches per his request. The first musical guests were Janice Ian and Billy Preston. Winner today was Dave from Seekonk, Mass, taking home that Financial Exchange Show t-shirt. And he's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mark, what kind of stuff do you want in your backyard?
A vast expanse and peace and quiet, Chuck. I don't have the former. I generally have the latter. So my aspirations aren't grandiose.
Tucker, what about you?
Bar.
Love it. If that's the case,
outdoor bar.
You should be up in arms about this Braintree development that was shot down by town residents who said, no, we don't want this going in. So this was going to be developed pretty much right in the parking lot of the South Shore Plaza. So we're not talking about conservation land. We're not talking about an area that was, peaceful, idyllic suburbs and this. We're talking about parking lots that are already in use for a mall. And the town residents said, no, we don't want 500 apartments going in here, including 180 senior housing units. And it's just a remarkable example of, I just think the attitude that is too prevalent too often, which is, hey, more housing is going to cause problems. And those problems can be various different things that people say. It could be, it's going to change the nature of the neighborhood. Well, there is no neighborhood here. It's a shopping mall. It's probably going to make it better, okay? It's, hey, this is going to hurt my property value. This is one that often bothers me because the same people say, well, this is going to hurt my property value, then go and complain when the assessed value on their taxes each year goes up because you're not building enough in the town. You can't have it both ways. I'm sorry. And so I think that when we look at this, again, I'm not a proponent of, hey, let's build 500-unit complexes everywhere. But in the last segment, we were talking about just how hard it is in most towns in Massachusetts. If you want to either build or convert a property from one unit to multi-unit could be a duplex. Again, I'm not talking, dozens or tens of units or anything even. It's almost impossible to do so, and you just get so much pushback from town members. And so I don't know what the answer is here as far as how to go about this, but we can't simultaneously complain that property taxes are going up too much and restrict building the way that we do as well. It's just not tenable anymore.
Why do property taxes have to go up if there aren't more citizens to provide services for? Why do they have to go up?
Think about it this way, Mark. Let's say that last year you are a school teacher, a garbage collector, or a police officer in a town, and inflation's running 10%. And the town comes to you and says, hey, you know what? Our tax collection's the same as last year. No raise. What do? I'm out. I'm going to go to the private sector.
Why do they need to go up in excess of the rate of inflation is maybe what I should have asked.
I don't think they do.
Oh, okay. Well, then we should all expect our property values on average to go up with inflation, and thus property taxes to go up with inflation. Even I, the biggest skinflint I know, don't carp too much when that happens.
A lot of people do.
Oh, well, okay, you probably shouldn't. I mean, you got to look at the real value of your property taxes. In some towns, real taxes have been going up by a lot, so they're right to grouse. In this case, I sort of get it. 500 units is a lot. If you know that area, it's crowded. There's at least one huge complex right there on Willard Street. I know because I lived in it. So I what's another 500 units? I don't know. That should come out in the wash. It should be self-supporting from a tax point of view, right? It shouldn't put additional burden, and it shouldn't change the burden on services, but it will make an already incredibly dense area. I mean, forget about going anywhere during rush hour or on a Saturday morning. You really need to plan ahead or just walk. I get that. I can't say I would have felt differently if I were an abutter or someone who lived in the neighborhood. But that's normal, right? You get something and then you want to exclude everybody else.
Of course.
You want to be the llast one in the door.
Yes. It's a normal human instinct to be like, oh, like, this is nice. You stay. Like, I understand that, too. I totally I do it to a certain extent as well. I totally get that. So I don't want it to seem like it's not a human thing. But what I am saying is it is something that when we talk about, gee, it's so expensive to live here and why is it so expensive to buy a house and there's no homes to buy? We do make it harder on ourselves because it's so hard to authorize new construction in the New England region specifically, inside 128 where a lot of people want to live. It's really hard to do new construction there. And so that makes it harder on us when we talk about the affordability part of the problem.
But there's been such a boom in multifamily building, even where you see this borne out in the data nationally, and even in my area, sort of South Central. I live in Rentham, so anybody who lives in that area knows there's a lot of multifamily stuff going up, particularly on Route 1. It's one massive multifamily structure after another, it seems. I don't know. I'm not defending. I don't know the particulars. I sympathize in this case, but it does seem to me that we have a lot of multifamily building going on here in Massachusetts, but that's somewhat anecdotal.
The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That's up to $1,000 off for a family of 4. Act now because travel must be completed by December 31st of this year. So go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
What's the deal with Prime Day? Has that been going on?
Yesterday, it's a 2-day thing. It started yesterday, ends today.
Does anyone notice anymore?
I noticed because we bought some Christmas stuff.
Oh, nice. What'd you get?
I don't know who's listening at the moment.
Okay.
I don't know if the kiddo's listening. I don't know.
Oh, they're big fans?
Yeah, maybe. I don't know. Yeah,
maybe. So, Prime Day. I think I'm just first of all, there's like 2 or 3 a year now, which I just find to be too many. On top of that, I never know. We talk about, buyer's remorse. I never know if I'm actually getting a deal on Prime Day or if I'm just getting a markdown from an incredibly inflated price. But you also have, I guess, some antitrust concerns about Prime Day, Mark.
Give me a break.
Here?
I thought it was a little bit kind of a flimsy connection here. It's not.
Yeah.
The whole thing bothers me, the idea that Amazon, with less than or around a third now, maybe a little bit more than that, of online sales and mid-single-digit percentage market share of overall retail sales, the idea that they represent a monopoly, even in a narrowly defined market, unless you define it as companies that deliver next day, started as a book company, and market themselves as superstores and have a film studio as the relevant market. It's
that's
hard
the
for
one.
me to see, right? Which is basically the way the FTC defined relevant market in this case, which seems the whole thing seems lame and a bit of a stretch to me. I've never personally been harmed by Amazon or felt compelled to buy from them. Chuck or Tucker, I don't know about you. I go where I get the lowest price. Sometimes it's Amazon, sometimes it's Lowe's, Target, Best Buy, whatever. So the whole thing feels lame to me, Chuck, and flimsy, but I'm not an antitrust lawyer.
I agree, and I'm someone who tends to have some stronger views on antitrust. I want more competition. I would love to see Amazon broken up in any one of a number of different ways, but saying that Prime Day is is evidence that stronger antitrust action is needed against Amazon. Well, does that mean that Walmart can't do Black Friday sales? I mean, what are we really talking about here in terms of what this means? So I'm very skeptical on this aspect as well, just because I think there are plenty of ways that you can make a case for, hey, do you want this much economic and to a certain extent political concentration in the hands of one company? My opinion is no, but is Prime Day an evidence of that? No.
And it's not clear to me what the tie is between Prime Day and the ongoing litigation, other than that they both have the word Prime in them, because the litigation pertains in part to Prime membership and the practices they employ to get people to sign up or conceal fees associated with signing up, that sort of thing. How does Prime Day further that?
Let's take a quick break here. When we come back, it's time for a little bit of Stack Roulette.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is coming soon on Saturday, November 11th at Fort Independence at Castle Island. Registration's ongoing, but spots are going fast. You still have time to join us, so go to dav5k.boston and help support these great American heroes. That's dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
Mark, what do you have for me for Stack Roulette today?
Chuck, something I haven't thought about, it's how the EV transition or revolution, I guess it is a revolution, will affect the salvage industry. You ever ponder that?
A little bit.
You have thought about it, okay.
Yeah, mostly when watching, episodes of Breaking Bad or, things like that and trying to figure out how, how do you handle batteries in
Yeah, you
a
can't just
junkyard?
chainsaw the car up.
No.
Right? So the article points out that this put me back on my heels too. I think I knew it, but I've forgotten it. There are nearly 300 million cars on the road in the United States. It's actually 285, but I'm rounding up. And about 5% of those reach the end of their useful lives each year. So 10% would be what? 30 million, 5%, 15 million. So let's just call it 12 million cars every year have to be scrapped in this very fragmented industry. As anybody who's ever gone to an auto salvage yard knows, these are small businesses. They're unbelievably labor intensive. And a lot of when you bring something to a salvage yard, they just sort of chuck it into, they weigh it and then they chuck it in with all the other like metals and you're on your way. But you need separate processing, different equipment, differently trained people. They're going to need to retool dramatically to handle volume, even if it's only, say, 100 million electric cars in, 10 years.
Because all the value of a salvaged EV, not all the value, but a lot of it, is in the battery. If you can recycle those materials into new batteries, that's a huge potential value. So wouldn't it be really ironic? I know there's been a lot of chatter about, hey, EVs are easier to produce and maintain, so maybe you don't need as many workers on that side of things. But what if you need more workers breaking them down in junkyards?
Yeah, or at the very least, differently trained workers, and that's going to take time. We appear to have that time, but...
Yeah, again, an EV that's made this year, unless it's, totaled, it's likely to, have a 10, 15-year lifespan just like every other car out there on the road today. So it's something where, as you note, the problem is not going to become acute today, but as we go out, 10, 15 years from now, hey, how are we going to deal with this? And I don't know what the answer is because I I've never worked in a junkyard. I don't know.
All I've seen, and my dad was in a business where he used some metal, so I scrapped it when that was wound down. All I saw there were cars and appliances. So it's got to suggest that this industry will also shrink.
Yeah. I want to talk a little bit about the upcoming winter travel season because last year didn't go so well if you were trying to fly. In particular, if you were trying to fly on Southwest, who had about as bad of a winter travel season as they could. Specifically, it was right. Tucker, was it right before or right after Christmas?
I think it was right before. I want to say it was like December 22nd or something like that. I'll look it up.
Yeah, I can't remember when it was offhand, but they went through basically having to shutter their entire operations because, A, they had, this huge problem with, weather that impacted their hubs more than anywhere else, but then their computer systems were simply not built to be able to accurately tell them where their pilots were, so their pilots had to keep calling in to tell people where they were and whether or not they could fly, and it took them a few weeks to actually get everything back up and running at full speed. The Wall Street Journal article that talks about this, the not main picture, but the second one down, they've got a guy next to a de-icing truck, and there's a little inflatable plane that he's trying to demonstrate on. Have you looked at the picture?
I did this morning. Let me just pull it back up real quick.
It looks like if you had a pool float that was shaped like an airplane, that's kind of what it looks like.
Yeah, there it is.
And the guy's like, oh, this is how you de-ice it. You squirt a little bit of this here and then a little bit of this.
You deflate it, yeah.
I just thought that was a gigantic de-icer. I thought, oh, finally.
And a really big human, too. Right?
Is he in the picture?
Yeah, I scroll down, Mark.
The second picture.
Yeah, it's like, he's looking at a printed version.
Yeah, sorry,
so
hard copy
it's
guys having computer problems.
Yeah. I would turn mine around, but, it's it is what it is. But so Southwest is saying, hey, we're not going to get caught this way. Again, we're going to do better. Interesting things, though. You can't directly spray windows with the de-icer because they'll crack. Doors you can't spray directly because it can actually seep through into the galley, which doesn't make me feel great about the whole flying on a pressurized plane thing.
No, not at all. Doesn't make me feel good.
But maybe it's, the expansion and contraction at altitude, makes the seals firmer probably.
Yeah, I think that's what's happening.
I'm guessing that's what it is. And so, yeah, you've got Southwest going through all this winter de-icing training, and, they sent a bunch of people to summer school. It's great. It's lovely. We're going to take a quick break for, I don't know, next 22 hours or so. But we'll be back tomorrow. We got CPI coming out tomorrow, so it should be a fun day. Again, anytime we get inflation data, always been it's been not necessarily fun, but it's been interesting for the last couple of years. So we got CPI tomorrow. We'll see you tomorrow on the Financial Exchange.
Veterans Development Corporation is proudly partnered with this year's DAV 5K. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development